Good morning. Welcome back to the channel. This video is not financial advice. I'm not a financial advisor. Do your own research, make your own decisions. All right, guys, welcome back. So in this video, I want to talk about a number of things: the bear case, the bull case, worst case scenarios for each, and just a number of other things. Okay. Try to do this from time to time, especially in times of mass fear, just to take a step back and to really look at the situation objectively, removing all emotion and looking at the different possible outcomes. All right. Okay, so let's look at the worst case scenario for each party here. All right, and for bears and for bulls. Now, for the sake of this conversation, I'm going to take going to zero off of the table, and I'm going to explain why. Really, spoiler alert, bears case is that zero is a very strong possibility. Okay, and if you really press any bear and any type of back and forth with them, that's what's going to ultimately come up. I've done this numerous times with numerous different people. And I'd be like, the asset's down this far. If you think that at some point these assets are going to recover and that there's going to be another bull market and that mass adoption is going to happen, how is this not going to be a good investment given how far it is down right now and how early it is in the life cycle? And then if you really press them, what you'll hear is, well, it could go to zero. Oh, okay, cool. That's your bet. And that's fine. Okay. But, you know, all this playing make believe online and acting like, oh no, I'm just waiting for a better price. But yet they have no price targets. They have no nothing. And these two things are really one and the same. If you're looking, unless you believe that these assets are going to zero, or you think that it's a very strong possibility that they're going to zero. And hey, nothing's ever a sure thing. Anything could happen. This is not financial advice, but you know, anything could happen. But being bearish down and guys, do whatever you want to do. Okay. I really don't care. My whole issue is that, like, if you're generally a bear on crypto, I don't know why you follow crypto every day. I don't know why you would be in my comment section. I have spent zero time in my entire life, in the 30 some years I've been on this earth, looking into assets that I have no interest in investing in and that I think are bad investments. Now, let's just say I live to be 80 years old. I don't think that I will ever spend even an hour doing that. But some people spend their entire day looking into an asset class and following an asset class that they have no interest in investing in and that they think is a bad investment. Well, that's what they think now. Okay. Once upon a time, they thought it was the future because somebody told them it was the future and they thought the price was going to go up. So they bought, but then the price went down and then they sold. And now, on a daily basis, they need to justify their reasoning and their actions. And so this is how they do it. They follow the space every single day just to make sure the price doesn't go up and that nothing good happens. So they can continually tell themselves, yes, I was right. I was right. I was right. That's really what it comes down to for all the normies that are in the space that are bears. Now, for the content creators, I think it's a different story. I think that the content creators are really just playing on that underlying core issue that some people have, where they just don't have very much confidence and conviction in the asset class, and they think that there's a strong possibility it could go to zero. You got to really wonder if the content creators believe that. One, because they don't really say that very often. They don't make going to zero part of their base case. And on top of that, they made a career move to cover this asset class for a living. So, all right, saying that there's no reason to be bullish because alts are down 99% is not too different. And actually, it's very, very similar to saying alts are up 100x. Let's go all in. This is the time. There's no reason to be bearish here. How are those things different? Somebody explain to me in the comment section. And the only thing that you could come back with is, well, they could go to zero. Okay, cool. Got it. We're getting somewhere. We're starting to get to the core issue here. But and the reason why this is important, guys, is because there's really two conversations happening in the space at any point in time. I don't think there should be, right? And really, it comes down to investing and trading and how they've merged these two things and how they've kind of eliminated the talks about strategy and any type of big picture plan for this space. It's all on a week to week, day to day basis, right? Flipping bullish one week, bearish the next week. I mean, it's even like every other day, sentiment will change just drastically. Okay, so let's go ahead and get into this. Worst case scenario, we're taking zero off the table, which I will go back into that throughout this video. Even though nothing's ever a sure thing, anything could happen. This is not financial advice. All right, so bears. What's the worst case scenario for bears? They don't have positions and numerous alts go up 5 to 10x. At that point, what do? Do you buy after something goes up 500%? Do you wait for a pullback? What if you decide to wait for a pullback and you think you're like, it's going to pull back 30%, right? And then it pulls back 20% and then goes up 20x from the bottom. And those blue chips never come back to their bear market lows. And even if you buy, let's just say that you wait for the market to bounce and for things to feel more safe. And all of a sudden they pop up 5x. And you decide, all right, I'm just going to buy. It's up 5x, but it's still down relative to its all-time high pretty far. I'm just going to go ahead and bite the bullet and buy, even though I do expect a pullback, but I'm just not going to risk it right here. You could buy at that point, and then it could bleed out for the next 6 months, all the way back down to its bear market lows. And see, the thing is that going to zero is also a risk for bears, because bears are saying that at some point in the future, they're going to buy. So even at that point in time, going to zero would still be, there'd still be the same risk that there is now. So, I mean, assuming that the risk of all these assets going to zero is somehow less, like in a future time where price may be higher than it is right now, I don't know how you can make that case. So going to zero would always be a risk for regardless of what general time period we were in. Now, years and years later, you could make the case that with enough adoption and price appreciation and stuff like that, that the risk of it going to zero would be lower. But I mean, that's really a individual perspective, right? Everybody will probably come to a different conclusion if you were to ask them that question. So what then, right? So the worst case scenario for bears is they miss out on the best opportunity they're ever going to get, or one of the handful of best opportunities they're ever going to get. All right, so what's the worst case scenario for bulls? Price goes lower, and bears would say, well, it could go to zero. And again, it all comes back to that, guys. And if you really look at the logic and the underlying, core reasons for a lot of these things that are being said and a lot of these strategies that are being pushed, the bet is going to zero. It doesn't make sense with any other explanation. The only explanation where there's some degree of, that makes sense is I think it's going to zero. So for worst case scenario for bulls, price going lower, it's hard to even say it's a worst case scenario. It's not for me, at least, because I have X amount of capital allocated every month to buy these assets. And the only thing that's going to stop me from doing that is something changing fundamentally with the technology or with the adoption process or with the new system in general. Right now, see, those are my indicators. Those are really the only thing that I care about. Like, as long as those things continue to move forward, I continue to buy, because that gives me the best insight possible to the big picture for these assets. What the market does, what the price does over a 30 or 60 or 90-day period, I just have a hard time understanding why that is a good indicator to use of what the future is going to be in this industry and with these assets. Especially considering we're talking about an asset class in a market where you can play on 100-to-1 leverage, and that affects the spot price 1-to-1. So when you can play on that much leverage and it affects the spot price the way that it does, I can't put but so much stock in what happens with this market over any given period of time. And that's taking out of the conversation the broader deception happening with the entire new system as a whole, right? And how the market and how the market volatility plays into that. But what I look at for whether or not it'd be a good opportunity to buy right now, what I'm personally looking at is the technology, the adoption, the broader trends with the adoption, with the general technology of blockchain tech and distributed ledger technology all around the world. My own like opinion on the likelihood that all of this tech is just going to continue to move forward, new use cases, right? New development, things of that nature. That's what I'm looking at, not the market, because the market in reality doesn't really tell me anything, right? If price jumps up 50% today, what is that going to tell me? Nothing. It could come right back down. Now, if several countries over the next few weeks decide to legalize crypto payment and they start adopting different technologies like this for, government use for large corporations, if that happens, okay, that in my mind, I'm looking at this, I'm saying now it's becoming, every time this happens, it becomes more and more likely that it's going to continue to happen based on most every other adoption trend of a new technology in my lifetime. Okay, so worst case scenario for bulls, it's hard to even say that going lower is a worst case scenario, but you have to say something. So that's really what you could say. The worst case scenario for bulls is that the price goes lower. And someone committed to dollar cost averaging and holding, prices going lower only allow you to accumulate more and lower your average. So, I mean, this kind of goes back to the conversation of, let's say that asset's bottom is like 10, right? But its all-time high was 200 and dropped all the way to 10. So it drops, what, 95%? Just correct me if I'm wrong on that. But so it drops 95%. And at $10, people are bearish as shit and don't want to have anything to do with it. But at like 40, they were buying heavy. Nothing changed with the underlying fundamentals and with the technology. If anything, the technology continued to be adopted and more development happened. So fundamentals just improved over that time period, but just price went from 40 down to 10, and they don't want anything to do with it then. And I genuinely think that if alts were significantly, if they never dropped this far, there would be people who would be significantly more bullish or just bullish in general at much higher prices, even though the fundamentals are the same. The fundamentals are actually improving as price drops. It makes no sense. It really makes no sense. I genuinely believe that people would have rather prices stay much higher, and they would have rather bought up at those higher prices. But again, the further it falls, the more likely people think that it's going to go to zero. That is what it all comes back to, guys. That's what sits underneath everything that any bear says right now, except for the content creators who, my personal opinion, are just liars. I'm not saying they're liars because they think that the price is going to go lower. There's plenty of times where I think the price is going to go lower. The difference is that I don't change my strategy because I think that, because that's a never-ending cycle. Okay, so I think the price is going to go lower, so I'm going to stop dollar cost averaging. Okay, so where does that end? Right, then I'm really just starting to trade, more or less. But that's just my own personal strategy. That doesn't have to be your strategy. Okay. All right. Who is really taking the big risk here? If you take going to zero off the table, who's really taking the big risk here? But if you add going to zero as a very realistic possibility, I 100% understand why bears think that this is too risky. But that's really something that should be built into the front end before you get into crypto. Going back to the videos I did back in early 2022, where I said you should reevaluate where you have your assets allocated And if crypto is not where you have the most confidence, I said this verbatim, if crypto is not where you have the most confidence, then you should look at moving your capital where you have the most confidence, because we're going into uncharted territory. Said this numerous different times. All right. Okay. So yeah. So in my personal opinion, the likelihood or your own assessment of how likely it is that these assets could just go to zero at any point in time, that should be factored in on the front end. Like if I think there's a 0.1% chance it could go to zero, and you think there's a 40% chance that they could go to zero, you should probably have less of a percent allocation, significantly less of a percent allocation than somebody like me. Because what we're viewing two different things, right? It's really the same thing, but we have drastically different perceptions of what we're looking at. And you might be right, I might be wrong. We'll see. I'm just saying that that should be built into the front end before you ever get into the space. If you ever do get into the space, and if you genuinely see these as bad investments, there's no reason for you to be here. There's no reason for you to be in anybody's comment section. What you should do, okay? You look at crypto, you say bad investment. Okay, cool. There's other investments. There's other assets you can invest in. And so why are you spending your time consumed with something that you think is a bad investment? It makes no sense. I've never done that my entire life. I don't know anybody who has. All right, so main takeaway, outside of the assets going to zero, bears are taking the majority of the risk, in my opinion. I mean, unless you have, and give me a good counter argument. And that's because the majority of the risk here is upside risk. Upside risk is significantly higher than downside risk at these levels. The further you go down, the more upside risk exists. All right. The further you go up, the more downside risk exists. Pretty simple concept. They spend all their time talking about price going lower. They never talk about what would happen if price shoots up. Right. You literally bears their entire, and this is more so directed at content creators, everything that they say almost is as if price is never going to go up, or price isn't going to go up until they say it's going to go up. And again, I don't have issues with people just deciding to be bearish, but I do have issues with content creators that are selling people on a lie and telling them that they're going to flip bullish when they're probably never going to. If they do, again, I'll say I was wrong. I'll do a video about it. I'd be happy to do that video. There's that I'm looking forward to that video more than any other video in the history of this channel. And I hope I get to do it for the sake of all of their viewers. But I don't think these people are ever going to flip bullish. Ever. And what they're doing is they're playing off of people's fear that these assets are going to go to zero. And see, they're not going to come out. Those content creators are not going to come out and say that. They're not going to come out and say, well, guys, it's entirely possible they could just go to zero at any moment. They're not going to say that because they've made a career move to cover this asset class for a living. So then you start having to well, why are you covering their asset class for a living? Like, if you think that it's so probable that they're going to zero, why would you be covering the asset class for a living? They're not going to say that. What they're going to say is lower. Lower is an easier call to make, especially when you're in a market like the one that we're in. Because in all reality, it will be lower until it's higher. People are like, no, the market's still going down, or these assets are still going down. Okay, cool. So you're waiting until they start going up. You're not waiting until they flatten out. That already happened with tons of different assets, and people still didn't buy. Chainlink's been stuck in a sideways channel for almost a year and a half. So price is going down, or price is still kind of dragging down. For the most part, we've been in a sideways accumulation process with the broader market over the last year and a half. When people are talking about, the price is going down, the price is going to go down further, not go up. Cool. You're waiting for the price to go up. Let's just call a spade, man. And, bears cover 50% of the available scenarios and 50% of the perceived risk. It all comes back to your general opinion of how likely you think these are going to go to zero. I mean, I really can't overstate that. That's what this all comes back to, 100%. Bears never make that a part of their case. I already mentioned that. Upside downside risk ratio, already mentioned that as well. And this really highlights how Bears' main problem is conviction. And that's fine too. I have very low conviction in certain asset classes, but I don't fucking invest in those asset classes and I don't follow them. I just don't get it, man. I don't fucking get it. Actually, I do. It's more of like they have to convince themselves they're right. That's what it is. If they really had any, see, they have no conviction in their bear thesis, anyways, and that's why they follow the space every day. They had no conviction in their bull thesis, which is why they got out of the market. But they also have no conviction in their bear thesis, which is why they follow the space every day, even though they think it's a bad investment, which is legitimately just not normal behavior. Unless you're actively shorting and you're trading and you're doing that as like a daily, weekly thing, if you're not doing that and you're just watching just to see, and you think that these assets are bad investments, it makes no fucking sense to follow this space every day. Okay. Bears look at the market and the assets and say, do I think price could go lower? And if they answer yes, they don't buy. Bulls look at it and say, given the current, or a lot of bulls do, look at it and like I do, a little bit of projection here. So bulls look at it and say, given the current price relative to all-time high, so let's say that's 96, 98% down, and the fundamentals, do I think that buying here will be a good move? And if the answer I come to is yes, then I buy. It's really just that simple. The Amazon example, if we could go back, if we could go in a time machine right now, and you knew that Amazon was going to drop 90 something percent, but you didn't know exactly how far it was going to drop, but you had the information you were put in a time machine. Amazon's going to drop 90 something percent. We're not going to tell you how far Amazon's going to drop exactly, but we'll let you go back and, have the opportunity to invest if you want to into Amazon once it's dropped over 90%, just not telling you exactly how far it's going to drop. Well, it could drop 95%. And you're like, okay, I'm buying. And then it drops 97% and you're down 40%. And then it drops 98% and you're down 60%. What would you do? Well, most people would just continue to buy because it's Amazon and they know where Amazon is going. And again, this highlights the majority of the problem for bears, which is conviction, which they don't have any real long-term vision on where these assets are going. And they have no real confidence that these assets are going to be around and appreciate in price exponentially over time. And that's why they have the position that they do right now. That's why they would respond differently to that Amazon example than they're responding right now to the crypto market. They don't see the long-term picture here. And a very, this is a lot of people are going to regret coming to this conclusion that adoption doesn't matter because price doesn't go up. See, these technologies have been adopted all over the world over the last 2 years. And that's really my main indicator. Now, for a lot of other people, they think that doesn't matter because their price doesn't go up. But that could happen for 2 years, for 2.5 years, for 3 years, and price not do anything. And then all of that get priced in within a matter of 2 or 3 months. Entirely possible. And if you look at the crypto market in general, and you look at the history of these assets, there's long periods of slow, just grinding down. And then there's a long flattening out period. And then there's a relatively shorter period where price increases in value exponentially. Or just price increases exponentially. So it's not a realm possibility. But, people have convinced themselves that because price does not move when certain types of adoption happen, that adoption doesn't matter. And in all reality, adoption is the only thing that matters. Adoption is the only reason why price would ever go up in the future to begin with. Again, the logic makes no fucking sense. That's why I push so hard to debate so many of these people, not on whether or not the price is going to go up or down. That's a stupid argument to take, the stupid debate to take. Because a lot of times I'll even think it's probably just as likely, if not a little more likely, that we go down in the short term. It really comes back down to strategy. That's the debate. Strategy and risk reward and all of those other things. And the general likelihood or how unlikely it is that these assets will go to zero. Like that's where the conversation is, not an up or down, because up or down doesn't really matter. What matters is what people decide to do. Okay. Really two outcomes, in my opinion. I mean, I guess you could say sideways is an outcome, but at some point, either the market recovers and there is another bull market and adoption continues until mass adoption, or they go to zero. I don't really think going sideways forever is a realistic possibility. So market recovers, another bull market at some point, or assets go to zero. And I just have a hard time seeing how the bear case is anything other than they're going to zero at this point. Another point, this is Bitcoin chart. And, I used to share this chart back when we were down in these general ranges, but this is a 6-year trend line. Okay. And not to say that it's going to hold forever, but I remember sharing it in these general ranges. And okay, so this general trend line is around 21-ish K. Just throwing that out there, for us to break to 20K and break below 20K, this trend line, this 6-year trend line is going to have to break. So I just know that there's going to be a bunch of people throwing out price predictions and all the bears are going to be coming out of the woodworks. I just wanted to show this, even though this could break, I just think it's worth paying attention to the same way I did back here. Okay. And let me know your thoughts on this. Let me know the difference between these two things. Knock yourself out. Oh, on top of that, supply still collapsing. I don't really show this metric anymore, just because I just don't show the metric anymore, but I still think it's an important metric. And I think it is indicative of the real demand for Bitcoin, not Bitcoin's price or not any other crypto's price. I don't think that their price is in any way a reflection, in the short term at least, of the real demand and the real value that exists. I think the market is just completely 100% rigged. I mean, I think this chart alone on its own pretty much highlights that. But I mean, I've just had a bunch of simpletons argue with me otherwise. I mean, at the end of the day, guys, you can play on 100-to-1 leverage in this space, and that affects the spot price 1-to-1. So it's very hard to make the case for why there's any real price discovery or why anybody should put much stock in what any of these prices are doing at any given point in time. So those are my thoughts. Now, ultimately, make your own decisions, do your own research, make the decisions that are best for you. I'll say something that I said back over a year ago. Make sure you have your capital allocated where you have the most confidence. And I would just make sure that you do that. And if that's in dollars or if that's in stocks or in gold or in Bitcoin crypto or wherever, or in real estate, wherever you have the most confidence. All right. But, my general position on bears right now is that, like, if you genuinely think these are bad investments, you don't see the big picture for the future, you really shouldn't be in my comment section. Okay. If you want to be, that's fine. I'm just saying that it doesn't make sense. I would just find something better to do, man. There's a lot of other things you could do. There's a lot of other things you could learn. It doesn't make any sense for you to be wasting your time here if you don't see any type of future for these assets. Okay. And you might turn out to be right. Who knows? Right. All right. That's all I got for this video. Let me know your thoughts in the comment section below. Take care. Have a good day. I'll see you in the next video.